IFRS 16 leases, subsequent measurement of the lease liability in the books of the lessee. Please refer to IFRS 16, paragraph 36 to 39 and 42 to 43. This is an extract from the actual IFRS 16, paragraph 26. After commencement date, a lessee shall measure the lease liability. After commencement date means subsequent. Firstly, number 1, by increasing the carrying amount to reflect interest on the lease liability. Secondly, number B, reducing the carrying amount to reflect the lease payments made. So the first thing you do is to add to the carrying amount of the lease liability the interest earned for a specific period. The second thing you do is to reduce the carrying amount to reflect the lease payment made. Remember, the lease payment includes both interest and capital. Number C, this carrying amount can also be adjusted for any remeasurements from reassessment or lease modifications. But please note, reassessments and lease modifications is not in the FRK 201 syllabus. A further measurement principle is that items to be recognized in profit or loss relates to the interest on the lease liability. So the interest is recognized in profit or loss, and any non-lease components forming part of your lease payment. Class example 12 will now be used to illustrate the subsequent measurement of the lease liability. We use the same information as we did in class example 9, where we illustrated how to calculate the present value of the lease payments for purposes of the initial measurement of the lease liability. Please remember those principles. The lease liability is initially measured at the present value of the lease payments. We will now look at the subsequent measurement of the same lease liability. The following information was applicable. It was 1 January 2016 Rocco and Memo on an office building, and it was for a non-cancelable period of 20 years. So my lease term N variable was 20 years. The following information was provided. It deals with the commencement date, and then everything up to there dealt with the measurement of the right of use asset. So we will not look at it in detail in this example. The lease payment applicable to this contract amounts to 200,000 Rand per month. 25,000 Rand relates to maintenance services. So that was the non-lease component included in the annual lease payment. The standalone price was also determined to be 25,000 Rand for the maintenance services. This information was used to determine the payment variable. In this example, there's also a residual value guarantee of 1 million, and it was expected that the full amount will be payable by Rocco Limited. Remember, the future value for purposes of the lessee was to determine how much is payable under the residual value guarantee, and that was determined as 1 million. The interest rate implicit in the lease is not readily determinable. What do we do then? We refer to the incremental borrowing rate of the lessee, which was given as 12%. So that was for my interest rate variable. And then in class example 9, we have determined the present value of the lease liability to be 15,789,498, and it was by using the variables as we have discussed above. What we need to do now is to prepare the journal entries in the books of Rocco, in the lessee. Remember, I'm busy with the lessee for the subsequent measurement of the lease liability. That 15 million that we determined above was the initial measurement. Now we need to determine the subsequent measurement by applying the rules of IFRS 16. And here's your suggested solution. As we have identified in IFRS 16, it had as a first step to recognize the interest expense through profit or loss to the carrying amount of the lease liability. So your debit entry is interest expense or finance cost through profit or loss. But you add that to the lease liability carrying amount. How do you determine that amount? It's important to be able to make use of either an amortization table where you split each payment between an interest portion and a capital portion, or if you have input all the variables we've identified above, you can make use of your amort function on your financial calculator. This is the first interest period, so you determine the interest of the first amortization period, and that is determined as 1.8 million. Then IFRS 16 identified as a second step to now reduce the carrying amount of the lease liability with the payment. But what's important in this example is to remember about the maintenance expense that has to be recognized through profit or loss. The full payment that was made was the 200,000 Rand for 12 months. With that amount, you credit your bank because you actually pay the lessor the 2.4 million. 300,000 relates to the maintenance expense in profit or loss, and the rest is a reduction of your lease liability, which is your step 2 in subsequent measurement of this liability. The journal entries for the second financial reporting period ending 31st December 2017 will be similar, but now you are dealing with your second interest period. So as a first step, again, you recognize the interest expense through profit or loss by calculating on your financial calculator the second period's interest portion in your amort function. And IFRS 16 says you have to increase the lease liability with the interest expense for the period. So the credit goes to the lease liability in the SFP. IFRS 16 requires as a second step to now reduce the lease liability with the amount of the payment. So the lease liability is debited. Bank is again credited with the full payment, but remember that you have to account for the maintenance expense. The maintenance expense is accounted for separately as an expense through profit or loss because it's a non-lease component. It was not used to calculate the present value of the lease liability. So the debit has to go through profit or loss. Please refer to the comment at the end of this example. If it now happens that the payment dates of the lease contract and the reporting date of the entity do not coincide, the interest expense still needs to be accounted for using the time proportion basis because interest accrues over time. So you will still have to accrue for the interest over time, even though the interest might not have been paid yet. Then that interest must be accrued against the lease liability account. We do not make use of a separate expense accrual account for purposes of leases. If a separate expense accrual account is used, the methodology per IFRS 1636 that we just read is not complied with. The requirement in step 1 that we read earlier was that the carrying amount of the lease liability must be increased by the interest. There is no reference made to a separate expense accrual account. Please refer to this expansion on this example of how the journal entries would change if the reporting date of the entity do not coincide with the payment dates in terms of the lease contract.